You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for your bi-weekly dose of all things options related, a program known around the globe as the Option Block, although the cool kids call it the old OB. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-exciting, at least we tend to think so in these parts, Options Insider Radio Network. Speaking of these parts, I'm not in my usual location. Nope, I have relocated down to the southern studio. So if I sound a little bit different, that's why. Listeners, be coming at you down here, I should say, for a few weeks. So look forward to a lot of fun content from the old southern studio. We know one thing at the end of the day: rain, nor sleet, nor southern studio will keep us from our appointed rounds here on the network today. So look forward to all the fun content you guys usually expect from us throughout the week. Of course, if you want even more content, and hey, who can blame you? These are crazy, tumultuous times. We all need a little bit of extra content, a little bit of extra helping hand out there. TheOptionsInsider.com/pro is the place to go. The second you hit that button, listeners, 200 plus episodes of awesome content waiting at your fingertips for you folks to mainline. More coming all the time. You also get early access to a lot of cool stuff that the rest of the network has to wait weeks, if not months for. So a lot of cool stuff out there, listeners. TheOptionsInsider.com/pro, the place to go to learn more. Man, we're already coming up on it. Already almost time to give away the June Pro Trading Crate. Hard to believe, man. June flying by out there. So get your name in the hat before the end of the month. Hit that button to get your name entered, and you too can win fabulous prizes. And let's see who's joining us on the old program today. First, let's go out to a sleepy, some might say a tranquil hamlet outside of Chicago, known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to Ye Old OB, sir.
Always happy to be back on Ye Old OB out here in the sunny, sleepy, tranquil hamlet.
Oh, good to hear things are sunny and sleepy. Are you getting ready for the big, is it NASCAR F1? I forget, the big race. Are you coming down this week, Mr. Uncle Mike, to the big city to watch the big race? Did you secure your tickets?
I did not. I'll be up in northern Wisconsin with family this weekend.
I am not going, obviously, either. I'm out of town, but it was crazy to drive down Michigan Avenue and see them erecting bleachers along the side of the street. I've never seen anything like that before, so that was certainly fascinating. Should be an interesting sight, I think, watching those cars go screaming down Michigan Ave and around the area out there. Should be interesting stuff. And also joining us from a place where I believe, I'm not sure if it's NASCAR or F1, one of them is coming to his environs. I believe around the time of RMC, it is Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show. To you as well.
Hey, good to be here. I'm excited to be here. Interesting little trading day we've got going right now.
It is interesting. But before we get there, listeners, it is Monday. It is time to kick off our trading week in high style. I will let both of our compatriots here prepare their buzzer hands so they will be ready. No music, obviously, for the Jeopardy theme because I am in the Southern studio. We're going to kind of do it old school here instead, listeners. But get your buzzer hands ready, Unklest of Mikes and Greasiest of Meatballs, because today's trivia question has to do with one of the seminal wrestlers of the 80s. This is a guy that most people, even Andrew knows this guy. Let me put it that way. So he's definitely one of the big three. If you had to name a big three trifecta of the 80s wrestling, this guy would probably be up there. Most people know who he is. I was just at some wrestling events for a different promotion this past week in Chicago, and people still wear shirts of this guy. It's just, he's legendary. He's iconic. But what people don't know about this person is that before he became the legendary, iconic pro wrestler that he actually was a professional baseball player. He actually had a contract to play for a professional team. Oh, we already have a buzz, so let me finish my question, then Uncle Mike is first. But I believe it was for the St. Louis Cardinals, and I do believe he played minor league ball for them for a few seasons before finally finding his calling in the world of pro wrestling. As legend has it, I have not verified this myself, but as legend has it, his final at-bat, he struck out or was hit, and he immediately charged the mound and attacked the pitcher. So I guess when you consider his later occupation, it does make some sense that he would go the way that he did. All right, Uncle Mike, I saw you have buzzed in first. Of whom am I speaking, sir?
Oh, yeah, Randy the Macho Man Savage.
Yes, the icon himself. Yes, a pro. Can you imagine him as a professional baseball player? There are a handful of people in life who just did what they were most suited for. That was their calling. And I don't think Macho Man could have been anything else but the Macho Man. That was what he was. If you listen to wrestlers talking about him who knew him back, they said he never turned that gimmick off. He was Macho Man 24/7. He talked to you in the locker room like that. Ooh, yeah, that was just the way he was. So the notion that he would be a MLB player is kind of funny. Do you have any enduring memories of the Macho Man in the MLB, Mr. Uncle Mike?
Too many to mention, but I do remember in third grade reading an article in Pro Wrestling Magazine, or I forget where I was, some article, something about the Macho Man, and I just remember him being quoted as saying, "Yeah, I had to give up baseball. It just wasn't satisfying enough at the end of the day. I wanted to get my frustrations out, so that's why I had to get into professional wrestling."
Good way to get your frustrations out. Either that or you charge the mount, one or the other, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading? What is lighting things up out there? What is going on out there, listeners? A question everyone has these days. And right now, what we're seeing is another one of these mixed bag days. You know, we rallied hard post-Fed. We rallied. We even rallied a lot heading into last week. Then it seemed like the rally kind of petered out a little bit. We were threatening that 4,400 level. Now have retreated back away from it, back below the 43.5 level as well. A few attempts were made in that sell-off period to maybe try to rally it again, but it seems like they just ran out of gas. So is the bull market exhausted? Are we just taking a pause here? Is this, of course, the calamitous canary in the coal mine that the bears would have you believe that we are just headed for nigh on the apocalypse to the dark side? I will say some of the headlines coming across over the weekend to give you a bit of pause. If you had heard the notion that there was a rogue mercenary army marching on Moscow, you would have thought you were living in the 13th century, not in the 21st century. So these are some of the headlines we've come to expect in the post-pandemic era. Moscow girding its defenses for attack by a rogue mercenary army. Of course, a potential coup in the making over there in Russia. That appears to have fizzled out, which apparently this Wagner mercenary group leader never watched Game of Thrones or Sopranos or any other show where the lesson was, you know, if you come for the king, you best not miss, because bad things await those who do half-hearted coups. So we'll see how long this person is for the world now that he has challenged the might of Putin. But intriguing stuff nonetheless. Coming into the start of the week, we are seeing the S&P 500 taking a bit of a break today, off about 0.25%. The Dow rallying, though, up about 0.1%, and the NASDAQ taking it on the chin, off nearly a full percent, about 0.8%. All that means our vol friends, including our friend Mr. VIX, trending away from the 12 handle, which I'm glad to see. I mentioned it on Vol Views on Friday. That 12 handle just gives me the willies. Whenever I see it, the hair on the back of my neck stands up because I get all this PTSD from 2017. If you weren't around in 2017, you're lucky, listeners. It was not a great year for options trading. It was not a great year for volatility. It certainly, we saw a lot of the business, a lot of the exchanges, the brokers kind of fall by the wayside. The volume shriveled up. It was a terrible year for options, all things considered. So when I see that 12 start lurking on the horizon again, it does give me a little bit of the old goosebumps on the hair of my arm and the back of my neck start standing up. Thankfully, we are moving a little bit in the other direction today. I'm not saying I need a VIX of a 30 either. I just need a little bit away from the 12 handle for comfort. 14.25 right now, listeners, up almost a full point, about 0.85. When we kicked off the show. VVIX, the vol getting a little frothy again. 96, up about 2 points. So threatening that par level again. Some of that could be found in the puts. We were talking about put skew last week on the network as well. Even though overall realized historical vol on the S&P is at the first, second percentile for the year, you're still seeing skew a little bit above that, around the 27 to 30th percentile. So there is some bid starting to materialize for those puts, even though still from a net vol level, we are still fairly low. VXX 2590 when we kicked off the show, down almost a full point as well, about 0.85. UVXY 1990. Yes, you heard me right, listeners. The 10-for-1 split is in effect. It went into effect on Friday. Unfortunately for all of our listeners out there, there were no options available on. I think we should have them now. I'll have to go check today. But Friday, if you're going to reverse split it, have the options there too. It's kind of a half-hearted thing to let people see this thing that they can't trade with the options that they want. SVIX 2685, up 0.75 point, probably a new all-time high. I'll have to check. This thing just keeps printing highs and printing money for the once and future Dr. VIX. UVIX 495, down 1/3 point. So this thing is going to have to reverse split it again. I said this a few months ago. Apparently no one listens. They just like to keep reverse splitting their products. So we'll see how long that lasts. And then VolQ 1830, up about 1/10 point. All right, a lot to unpack there. Let's go around the horn. Uncle Mike, you won our contest this week, so you get to go first. Any other enduring fun memories or just trivia you might have for the Macho Man you want to share with our audience? And then B, what's catching your eye in a mostly non-Uncle Mike type of day? I hate to say for you, sir.
Well, I mean, in terms of Randy the Macho Man Savage, of course, a lot of people know his brother is a genius, Leaping Lanny Poffo, who eventually became the genius.
Yeah, he just passed away a few weeks ago or a month ago as well, I believe.
I saw that. Yeah, it was too bad. I had a lot of respect for the genius. He was a poet laureate. He was a genius, and he liked to leap. Got to respect a guy that does that, who grew up with the Macho Man. Yeah, I mean, with the Macho Man, it's sad that he passed away, but I guess the way with which he did, he lost control of his car and he crashed going like 60 miles an hour or something like that. I mean, of all the ways for, not that it's good that he's dead by any means. I was a huge Macho
wasn't he
Man
like,
fan.
didn't he have a heart attack while he was driving or something like that?
Yeah. And
that's just terrible.
What a way to go out, though, if you're the Macho Man.
It makes sense.
Total Macho Man way to go out. But yeah, he was definitely was a big fan of the Macho Man. He did a lot of great things for the sport. But anyway, the markets today, 44.48 is the high of the year that we touched a couple weeks ago, and we just have not been able to have any positive momentum since we touched that. And so are we going to go higher? Are we going to go lower? This is kind of a stage to where if you look at the highs of 2021, at the end, we closed just short of 40 or just shy of 4,800. We got above 4,800 in early 2022. So 4,800 is the all-time high. We're still significantly far away from that. And we're kind of getting to the point where we're about halfway between the close of last year and the all-time highs. And so this is kind of a mark to where I've said this is one of my favorite little sayings buy the dump, sell the hump, don't diddle in the middle. And this is one to where if you look at it from that time frame, you're diddling in the middle right now. And so
I love how Mark cracks up
like
he's
a while, Mike, and I love it.
He's never heard that before. He's just losing his mind over there.
I'd forgotten about it, and that just warmed my heart. Thank you for that.
No problem. Happy to do it. But so with that being said, a lot of things with which I'm looking at right now, I'm cautious. I know my whole trademark thing is I'm long-term bullish, short-term cautious. But I am leaning more towards the side of caution right now, just because of the fact that we don't have any major technical indicators saying we're breaking out, we're continuing, we've pulled back or anything like that. We're not continuing to make new all-time highs every day. We're not dipping and touching support. We're just kind of in the middle. And so, while I do believe in the next few years we're going to be north of 5,000 in the SPX, I don't know if it's going to necessarily happen in the next 5 days. And so with that, I'm kind of in what I like to refer to as not today mode, meaning am I going to put a ton of deltas on the table? Not today. And that's kind of where I'm at with this market right now. In terms of some other things with which we're seeing, we're still relatively flat right now in the 10-year note. We're not having a lot of major breakouts from the Fed announcement or anything like that. And then I just think with where we are, combine the fact that we're in the summer and a lot of times we don't necessarily have major rallies in the summer, although they do happen. And where we are from the market standpoint, really not a lot to make me want to get super long this market. So I guess I'm just bullish right now, I guess if I'm just bullish, that makes the market that's bearish compared to most people, I guess. And the bull side of the equation is like what Mark was saying, is that if we have the headline risk that we had and the S&P is only down roughly 10 points on the day after war in Russia, if you will, we're just kind of not doing much right now. So that's what I'm seeing today.
Wow, even the perma bull only mildly bullish right now. That should give you some pause, listeners out there. Let's turn now to the greasiest of meatballs, Mr. Mark Sebastian. Mr. Meatball, sir, if you have any enduring memories of Mr. Macho, have at it. Who doesn't, of course? The Slim Jim commercials leap to mind. All sorts of fun stuff with the Macho Man. And then B, what's catching your eye in this market that is now post-mercenary army, I should say, marching on Moscow? Never thought I'd say that on this show. But here we are. Here's where we find ourselves in 2023. What you got, Mr. Meatball?
Well, I loved him as Buzzsaw in the original Spider-Man movie.
Yes, which absolutely ruined his life because he got horribly injured making that movie, and that got him addicted to painkillers and everything else. And
oh, geez.
Kind of led to his downfall. Because he had to do those scenes, I guess, so many times. He did his own stunts, and he just mangled his back and apparently never recovered from it.
Ugh, that's terrible. He was a great wrestler and just he always was, in any other era, he would have been the superstar, and he just happened to come up at the same time as Hulk Hogan. He was so dynamic and interesting and technically proficient that the timing of his rise was a little unfortunate. Looking at the market, it's interesting, Mark. On the open, the NASDAQ was up and everything else was down. Market breadth was terrible. Now, as the day has progressed, we've seen the NASDAQ really kind of fall apart. The Dow flipped from down about 0.25% to now up. The Russell is up now. And market breadth is actually positive today. If you look at the major ETFs, XLB is up. XLE, XLF, XLI, XLP, XLU, the retail XRT is up. The only ETFs that are down are XLK, so tech, pharma, consumer discretionary, and your biotechs. So this is kind of, dare I say it, like today's kind of a risk-on day because they're coming out of big tech, out of the Mag 7, if you will. And rolling back into energy and some of the other names like that. Just really kind of interesting and unique. People keep asking me, people today were asking me, why is the VIX up and vol futures and, the vol ETPs down, and was trying to explain that, we've got kind of this weekend effect, and, that's pulling VIX up, but the vol futures were kind of prepared for that already. And that's why you're seeing what you're seeing. But it's a really interesting day in that the way market breadth is moving, and the Dow has gotten stronger even as the NASDAQ has softened up. So money coming out of the mega cap and into just big cap, large cap, you might say.
You might say that indeed. Let's see what else we might say out there, listeners, in ye old market today. Let's go out and see what else is lighting up our tapes out there. Overall, volume-wise, Mark was just talking about the breadth. We are not seeing stellar volume. I guess it kind of depends where you look yet again, as always is the case with the market. You go out to the vol space, for example, listeners, and things are looking kind of anemic, especially given what we've seen out there of late. We've seen VIX do over 1 million multiple times over the course of the past month, so we're kind of used to a robust level. Even if that ADV has come in a little bit, it's down to about 815 right now. We still are looking at shy of 200,000 contracts in VIX right now, 196. So kind of light, not a lot going on. But again, that's kind of being expected given what you're seeing out there in the rest of the market. Of course, the day where anyone's waking up to trade, you're going to see SPY putting up numbers. And that's the case again today, 4.8 million. So looking pretty robust, well on its way to its ADV of about 8.5 million right now. So doesn't take much to get SPY cooking. Same kind of happening out there in the S these days. We had an interesting discussion on our Advisors Options show last week with Mr. Matt about just the impact of these zero-day contracts on overall volume, how much paper continues to go up in products like SPX with zero-day, which, by the way, speaking of zero-day, that's going to lead in well to our question of the week coming up in a little bit out there. All things zero-day, pretty popular these days. S, 1.51 million contracts right now. The ADV, a little bit shy of 3 million, about 2.88 million out there right now. So the S looking on track to hit its ADV today as well. What is not is small caps. Small caps kind of lagging out there right now. Let's go out and see what our old friend IWM, the flavor a lot of you like to play with, is up to. It's up about 0.5%. So bucking the trend. Again, if you want a deeper dive into all things small cap, check out our TWIFO episode from last Thursday where we went deep with the folks on FTSE Russell on all things recon. That is really their big day for the year. That's like their Christmas and New Year's and Halloween and Arbor Day all rolled into one over there in the land of small caps. And it's also, for you folks, even if you don't trade small caps, there's some interesting trends that comes out of that data every year in terms of how the market is breaking up. And they admitted, too, that they have never really seen a market as stratified as this one is, where so much of the action is concentrated in, the Magnificent Seven, the uber super sexy seven, call them what you will out there. It's fascinating to watch. Even people who have been watching these names and breaking them down into large cap and small cap and growth versus value and have been doing so for decades, even they are somewhat at a loss for words for what we're seeing out there in this market right now. All that a long way around to saying small caps not doing a heck of a lot today. 380,000 contracts on the tape. The ADV 1.1 million. Doesn't seem like it's going to get there today, but I've been underselling IWM volume for a while, and they've been proving me wrong. So let's see if today is another day that continues to do so. The Q's a little robust today. 2.2 million contracts on the tape for the Q's. The ADV surging strongly in the right direction, back up to about 3.3 million. It was down well shy of 3 million not too long ago. Now back up north of it, I should say. So just a lot of paper out there in Q's land. That continues today. Let's get out to the single names. Let's see if we find some paper out there. And the answer is kinda. It's a respectable day. You have to respect it. 237,000 contracts. That's what it costs to break into the top 10 today. I get you to your old friend, a Lucid Group, formerly of Lucid Motors. They're the parent company, effectively, of Lucid Motors. Ticker symbol LCID, trading 5 3/4, up about $0.25. So a decent little pop for them today, up nearly 5%. On the year, they still have a long way to go to get back to their high of nearly $22, about 21 3/4. They hit that back in July of last year, July 20th. So a far cry from that. They are still pretty much within spitting distance of their 52-week low, which is right around $5.50. So 5 3/4, I guess when you look at it in that light, not amazing. But then again, it's better than it was. They were hanging out right at their low right before this. So apparently any rally they'll take. We have been talking about upside in these smaller EV names for a while. We were joking with the Flowmaster last week about Ride and how he may have gotten into that underlying a little early. But we also talked about options paper out there. We talked about Nikola on the Options Oddities last week. Now Lucid. A lot of these smaller EV players seem to be coming alive, at least from an options perspective. So we're probably going to be talking about more of these in the future. Listen, are you slinging yourselves a little bit of these, the cheaper, let's say, I won't call them second tier because they're all doing interesting things, but just from a stock and options perspective, certainly a category or two below the market leader, which is Tesla out there. Number 9, let's see, we've got 245,000 contracts for the old Alphabet. So maybe some of that steam coming off that AI machine that was just charging north, seemingly unstoppable for the better part of the last month and a half or so. Alphabet, obviously, in the vanguard of that, coming off a little bit now, off about 3 2/3 of a point, exactly 3%, trading 118 2/3 out there right now. So intriguing stuff out there for good old Google at number 9. Number 8, going back to 2021, it's the king of the apes. It's AMC, trading $4, pretty much even, kind of unched on the day. Not a banger day out there. You know the story of AMC. It's been quite the roller coaster ride. Even over the course of the past year, people forget it got up to $27.50 in August of last year. So when we did this rally dance last year, AMC participated hard, up to $27.50. Obviously a far cry from that now with $4, but still putting up some options paper to the tune of close to 250,000 contracts. Number 7, will he take a break from all things formerly known as Facebook to fight in a cage against Elon Musk? That's the world we live in. Mercenary armies are marching on Moscow, and Elon Musk and Mark Zuckerberg might fight in a cage, and it might actually happen. This is the world we live in. Maybe the market not liking that, listeners, because they're coming from Meta a little bit today, off about $10, trading 278 3/4 right now. Obviously, they've been on the rampage of late, so they have a lot to give back if they so choose. But it is kind of funny that their CEO now talking about it. It reminds me of an episode of Friends where they had Jon Favreau playing that tech entrepreneur who made a bunch of money and decided he wanted to compete in the octagon to prove his manhood. And now we have real life imitating art. Let's go to number 6 on our list. This is good old Carnival Cruise Lines. We're talking about them a lot lately. Listen, by the way, Meta had put up 265,000 contracts. If I didn't mention that because I got so distracted by the pending cage fight. Number 6, Carnival Cruise Lines, 333,000 contracts on the tape out there, trading about $14 even, off about $1.75 today. So giving back a lot of that juice that it has gained over the course of the last month. It rallied from about 11.25 all the way up to about 16, almost 16.5. And now coming back down the other way a little bit. It's obviously still a ways to go to get back to 11, but giving up the ghost a little bit today, off about $1.75, a little over 10, almost 11%. So taking some of that juice off the top. If you've been slinging some upside, a lot of people were slinging upside in Carnival lately. We one of them, listeners. Maybe not the best day out there if that is the case. AMD, number 5, coming in 477,000 contracts, trading a little bit shy of 108 right now, off a little bit over 2, about 2 and change today, nearly 2% for AMD. You folks know the saga of AMD. I won't repeat it for you, but again, good for 477,000 contracts. This is starting to become an intriguingly frequent occurrence. Apple coming in much lower than its normal number 2 spot lately. A lot of names kicking Apple to the curb, partly because Apple volume kind of dwindling. Maybe this lofty stock price really starting to hurt the options out there. Either way, the Apple volume continuing to kind of be, today, 518,000 contracts. It's not nothing, but there are 3 names above it here on the list today. So again, kind of quiet for Apple. Apple off $0.75. So the market obviously not happy today. Never likes a day when Apple is red. Number 3, got the Amazonian, 670,000 contracts on the tape for the Amazonians out there. Actually, 630,000 contracts on the tape for the Amazonians right now. Amazon off about $1.50 or 1.1%, trading a little bit shy of the 128 level right now. So looking better than they did back in our death poll we did our who would you prefer, which do you prefer poll, the Amazon versus Facebook poll we did probably about a year ago now. Obviously, Meta has had quite the resurgence since then. Amazon looking good, but not quite to that Meta level. Number 2, it's NVIDIA. You know, they have been the definite vanguard of the AI surge in the market, taking a pretty aggressive break today as well. Off nearly 16 handles, trading 406 and a quarter, off nearly 4%. So giving back a lot. Of course, they hit a new all-time high of nearly 440 not too long ago. So probably inevitable they are going to retreat from those lofty levels. They've just been bidding this thing up to high heaven. The PE is now 211 if you are intrigued by such things, if such things even matter. Which acronym matters at the end of the day, right? Is it AI or is it PE? One of those has to trump the other. Right now, it clearly is AI. Will that remain in the long term? I guess we'll find out. And you know the number one player out there, listeners. We were joking about Lucid and everything else before, but it's still Tesla at the top of the options roost, folding the throne yet again. 246.15 right now, off about $10.50 or almost 4.1%. So they're coming for a lot of these top-heavy NASDAQ names right now. This just a little bit of profit taking, or is this the beginning of the worm turning, listeners? I guess we shall find out. What it is not the beginning of, it is actually the end of. It is earnings season. We were talking about this on Vol Views last Friday and on the Advisors Option last week with Mr. Matt, the keeper of all of our earnings data. That said, we do have a little bit still on the radar this week, including one of my favorite names, Walgreens Boots Alliance, popping off tomorrow. We've got Carnival Cruise Lines popping off today. They were before the bell, actually, which is why they are putting up some numbers. If you are intrigued by good old Walgreens Boots Alliance, they are before the bell tomorrow. General Mills and Micron on Wednesday. And then Thursday, we got Rite Aid and Nike. So still some names you have heard of, even if we are kind of coming into the tail end of it. But never fear. We are preparing to re-rack the data, get ready for the kickoff of the next wave of earnings season. We do have some numbers for you right now, hot off the presses from our friends over there at ORAS. Let's look at Carnival Cruise Lines before the bell today. They went into their announcement, $15.80. They were trading, as of the time of this report, 14.75. So they were pricing in 10.4%. They only delivered 6.5%. So actually underperforming on the earnings vol front, which is kind of been par for the course. Let's look ahead a little bit, see what we've got baked in for names like my favorite, Walgreens Boots Alliance, popping off tomorrow before the bell, trading 31.40 when we ran this report. They were pricing in $1.70. In the past, they've moved to $1.73. So heck of a lot of nothing priced in right now in Walgreens Boots Alliance. Let's go out to Micron the next day after the bell. 65.25 is where they were trading. And this is interesting. They're pricing in about 4.25, listeners. In the past, they moved $2.97. That's a fair amount of extra juice for Micron. Of course, some of that spillover in the chip space may be bound to impact that straddle as a result. So could be what's accounting for some of that extra juice. But either way, some intriguing extra juice in Micron. Let's go out to Nike, 29th after the bell as well. 109.5 is where they were trading. Now, this is also interesting. They were pricing in $7.50. In the past, they moved nearly $8.50. So a fair amount less juice in Nike land. So maybe have they come to grips with the inflation monster? Have they tamed that? Is demand still strong? I'm not sure what's to account for less juice in Nike, but there you go, listeners. Speaking of less juice, 94% is where our season is hanging out right now. We keep revising that number down as we keep adjusting the overall numbers here. So 100%, of course, is a bullseye. It means everything moved exactly as much as its straddle. We've been doing this for a while. I don't think I've ever seen a 100% season yet, but of course, everything unprecedented is happening now, so it's bound to happen sometime soon. In the meantime, though, 94% right now. So it was 96% last week. We have continued to revise that down a little bit. As we keep on rolling, listeners, it's time to get weird. It's time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where things get weird, things get wild. Speaking of weird, Mr. Meatball, how long have you and I been talking, and the Rock Lobster, and just about everybody who's come on the show and on the network to talk about unusual activity with me, how long have we been talking about people buying crappy puts in REITs and related names, right? It seems like that trade's been going on for a couple of years now.
Since the Fed started raising rates, it's been just constant put buying in these REITs. It's nonstop.
Well, what if I were to tell you that someone finally bought some calls today? What would you say? Would that blow your mind?
What?
Yeah,
what?
Exactly. That was my takeaway as well. A name we talked about a lot. People have been fading. And then also it's been off for the past year, so not surprising. Actually popping a little bit today, up about 20 cents or about almost 2%. What name am I talking about, listeners? I'm talking about AGNC, ticker symbol AGNC. This is a name we've been following for quite a while. They are a parent company of Agency Mortgage Management, a bunch of other names out there. Trading, like I said, up about 20 cents today. On the year, not as great of a story, off about almost $1.50 or about 12.5%. They hit their high, looks like about a year ago, close to it. That was actually in the August run-up of last year. So $12.88 was their high. Their low came $7.30. That was back in October of last year. People forget how aggressive we moved from August to October, from the highs in the market to getting down towards the lows again. People forget about that sell-off period, and this looks like it hit Agency pretty hard at that time as well. They hit their low in October. Then they tried to rally it again. 12.14 it hit in February. So the second leg of the run-up, Agency got carried along with it. Then they sold it off again. It got down to a little bit under $9, $8.87. That was on May 24th, so about a month ago. So over the course of the past month, they've actually had a decent rally. They're up about a little over $1 or about 11%. And maybe that's what our friend here is looking at, because someone came in this morning, Mr. Meatball, and scooped up nearly 5,893 of the Jan 11 calls. They lifted the offer, paid 18 cents. I remember they have been higher than 11 just over the course of the past year. Their 52-week high is actually nearly $13. So these calls could pay off. The stock was actually right about here. It was the 10.11 when they put it up, so stock hasn't really budged. Obviously going to be earnings between now and July 24th. Now and the end of the year and January, the earnings are on July 24th. Before you go crazy, they are going ex-div, listeners, so you're going to see a lot of other call paper hitting the tape as well. That's all if you look at it, it's garbage in the money stuff. If you're doing div plays with out of the money calls in January, then you're doing it wrong. You need to call me up and I'll walk you through how to do it. So intriguing stuff, Mr. Meatball. What are your thoughts? Someone actually buying calls on Agency. Are you down with this?
I'm surprised, but maybe somebody trying to get back into the stock or thinking about buying REITs, but doesn't want to jump in until they hit a certain price. So it makes some sense from that perspective, but it is definitely outside of the norm. I'll say that is definitely an odd block, if you will.
So you're not going to be piggyback on these and just diving in and loading up on all the calls and Agency?
I don't think so.
Yeah, it's not a terrible level price and everything. I just can't get behind the notion that this thing's going to pop hard. So I mean, it could surprise us all. There are mercenary armies marching on Moscow. I'm not sure if you heard of that. So anything could happen, but intriguing stuff. Yes, they can buy calls in these names. I'll have to go through our list of trades we are looking to pay off in this one and in Apollo and every other name out there, listeners, NLV. But we might have some we're still tracking in Agency as well. I have to imagine they are all puts. But intriguing stuff nonetheless here, listeners, as we go out to Agency. Let's keep the ball rolling. Let's go out to Baxter International, listeners. Ticker symbol BAX, BAX. Trading 44 3/4 right now, off about a quarter on the year. Let's see, a year ago was trading nearly $70, 66 3/4. That was pretty close to the high. The high came a few days later, 67.5. Ever since then, it has not looked back. They crushed it all the way down to 37 1/3. That was back in March. So yeah, this thing from pretty much July of last year to March did nothing but go straight down. Then they tried to buck the trend. They rallied it back up to about, looks like 47 1/3. That came on May 1st. Then they sold it off again back down to about $40 in late May 30th. And then over the last month or so, they've kind of rallied it again. Yeah, on the last month, this thing is up about 3.5 handles or about 8.5%. So they have come try to rally it again, getting it back up to where it is right now, about $45, 44 3/4 right now. So intriguing stuff, still down on the year, about 22 handles and nearly 33%, but not quite at the low for the year either. So intriguing stuff out here. But it seems like, Mr. Meatball, somebody is deciding to draw a little bit of the old line in the sand here in Baxter, going to the 40 strike. So one of those psychologically significant strikes you see people liking to write puts on. They came in and sold 4,620. What's weird about these is they sold them in the weeklies. These are the August expiring on the 4th, 40 puts for 44 cents. There's a lot of fours in there, listeners. The August 4th, 40 puts for 44 cents. Say that 5 times fast. This is about a 34 vol. The market was pretty wide, actually, which I guess this is Baxter, not the hottest name. It was 35 at 60. So intriguing. Also, the stock was at 44 when they sold these 40 puts for 44 cents. Add those fours into the equation there. But yeah, interesting that they would come out and sell these in the weeklies. I thought maybe they were trying to dodge earnings, but no, earnings are actually the week before. They're the July 27th expiration. So I'm not sure why they would choose the week after earnings. If you're going to do that, just go all the way out to the regular monthly, get the full month. I'm not sure. The timing is the weird thing to me. The writing of the put, I get that. It's not a terrible level. They are pretty close to the low for the year. And this trade, it gets them into the stock, not that far above it if it does sell off. Just, I find the timing a little bit wonky on this one. Mr. Meatball, do you concur, sir?
Yeah, I do. I think that's exactly what's happening here.
Would you rather, at that point, if you're going to sell those puts and you're going to do it in the week after earnings, why wouldn't you just get the full month, get all the premium you can, right?
I mean, unless they're planning on closing it right before earnings or something like that, see if they can soften things up a little bit.
Well, that's what I thought too. But earnings are the week before these expire, so they went out a week after earnings, which is weird.
Maybe they want a little time. You get that. You get that you get that initial earnings move. Yeah. Then typically you get the snap the other way, and then the stock ends up not going that many places. Maybe that's what they're thinking.
The old patented earnings weirdness. It does happen. So, yeah, I suppose that there could be a number of reasons. Listeners, do you like that? Would you construct your trade that way if you were selling premium and you knew exactly when the earnings event was? Would you have it expire maybe right before the earnings event so you don't have to deal with it? Or if you're going to sell it, would you have it expire 1 week after for whatever reason? If you have that many weeklies, you can just do the monthly and just get a whole extra month if that's what you really want. Just intriguing stuff here. Sometimes the structure is the interesting part of these trades. Let's get out of here on some just silly fun before we get to Uncle Mike, because he's always silly fun as well. Let's go pay off, because it isn't the most banger day for single name options volume out there today. Let's go pay off some old trades. Mr. Meatball, let's go back to March 20th. I'm not even going to run down what happened in the stock. I think you can intuitively tell me if these worked out well or not. We talked back on March 20th. Remember, this was the height of the contagion fears. We saw someone coming in and selling 5,450 of the April 1 calls in Credit Suisse. They got them off for 13 cents right on the bid when the stock was 97 cents. Just go on a limb, Mr. Meatball. Do you think these worked out? These are the Aprils.
Yeah, of course they did.
Yes, they did. They did all right on these bad boys. We kind of mocked them at the time. We're like, really? What? 13 cents? Is that what you do? What if you get a crazy squeeze or some pop in these? But turns out they knew better. These worked out. Spoiler alert, listeners. They made about a whopping 70 grand on this trade. Now, if they had stock they were writing these against, then obviously that's gone the way of the dodo. So they could have still been a net loser on this trade for some size. But either way, I don't love this trade. If you have stock, then what are you doing? Just writing the calls for 13 cents. Maybe you want to bail on the stock at that point. Or if you're just writing the calls, you're taking an inordinate amount of risk for 13 cents. Either way, I don't love it. I would definitely not recommend it to our listeners. But hey, it worked out for these folks, at least on the option side. We don't see their stock leg. I'm going to assume they had some stock and they're still probably crying themselves to sleep at night. But nonetheless, the 13-cent calls that they sold in Credit Suisse ended up working out for them. You know, it always works out for all of us listeners. It's the strategy block. So let's get there right now.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. And Uncle Mike, this is perfect timing to have an in-depth discussion of strategy, because I've been meaning to ask you this question. Let's say, hypothetically now, this has never happened in the real world, but hypothetically, let's say I am marching my mercenary army towards the capital of my country in order to topple the dictator who runs my country. Is it good or bad strategy to then just call that off and retreat like within 24 hours? Or should I, once I'm in for a penny, should I just go all the way? What is your advice on the strategic side of that, sir?
On the strategic side of mercenary anarchistic overtakings, is that correct? You still there, Mark?
Yeah, I'm here. My thing's just going crazy. Yes, I played the music for you. But yes, that is exactly what I'm talking about, sir. Mercenary tactics and strategy. Go.
You know what? I mean, I've been very blessed. I happen to live in the greatest country on planet Earth, so I've never really had any need or desire for any anarchy or anything along those lines. So I can't say it's really a field of expertise for me. But I suppose if I were to live in Russia, then what I would try and do instead of trying to overtake the Russian government, I'd just move to America. I think that's what my strategy would be if I didn't want to be there.
Some strategy block. I'm expecting, pincer movements and talk of logistics, and this is what I get. Move to America. All right, fine. Talk about your option strategy. Go for it. Whatever you want to do. I don't care.
Well, I mean, let's take this a whole another level then. I mean, like if I were living in Russia and weren't happy with the government, then I'd move to America. That's what I would do. But I guess it's kind of like asking, I'll quote it makes me honestly think of a Beavis and Butthead episode from back in the day. Butthead said to Beavis, "What would you say if you were a turd?" Beavis replied, "I'd say it sucks being a turd." And when you think about it, it's all true. So if I was in Russia, I'd say I didn't want to be there. I'd say, well, it sucks being in Russia, and I'll move to America.
So Mark, you now have two names for this episode.
I do.
Either can be if I was a turd, it would suck, or you can just call it option block, diddle in the middle.
Man, I'm on fire today.
All of those will get us nice flags in the iTunes store. Like, what is this episode about? But yes, I did not expect the Uncle Mike Beavis and Butthead reference. So you're throwing me curveballs left and right, sir. Just like the beloved Macho Man Randy Savage, sir.
You never know what's going to come up. So with the added curveball, we're kind of at a curveball in the marketplace right now in that for those of us that were selling vertical spreads or selling covered calls for the last couple of years, well, the last couple of months, we're not quite getting the same bang for our buck that we once were. The market's throwing us a curveball with volatility coming down as it has a little bit. So what I want to emphasize today is that you need to be able to roll with the punches when you are doing your trading. And so one thing with which you could consider right now, and this does not apply to all stocks, this does not apply to all indexes by any means, but this is just something to kind of consider, is that if you have been more of a vertical person or just a covered call selling type of person, now could possibly be a better time to get horizontal or diagonal. Now, what do I mean by that? Well, if you believe that volatility is lower right now, and volatility is only lower if you think it's lower. So in other words, it's only low if you think it's low. So in other words, and I'm quoting the Viceroy on this, just because the VIX is at 12 or 11 or 13 or whatever, it doesn't necessarily mean it's low. If it's low, it means you think it's going to be higher. So with that being said, if you are selling premium, what might be something to consider is maybe locking in longer term premium by buying it. So let's say that you would buy a 3 to 6 month call option and you want to sell other calls against it, whether it's the same strike or maybe a little bit above the current strike, whatever the case may be, depending on your sentiment in the market. And you can do the same thing with puts. Now it could be beneficial in that, let's say we have an increase in implied volatility. You locked in volatility at a lower price for 6 months out or 3 months out or whatever you decided to do. And then the following month, if volatility is higher, you'll get that much more juice for the strike that you're trading. Now, of course, you'll have to have, there's more than just, volatility is just one of 6 option trading factors or option pricing factors. But the thing with which to consider with this is that factor, if you believe it's low, you would be playing it in a more correct manner. So that's another thing with which to think about when doing your trading. Once again, if you're bullish on something and the market goes down, or you're bearish on something and the market goes higher, it's difficult to make money, no doubt about that. However, if you do have that factor in your favor, meaning that you're trying to use the fact that volatility is lower, if indeed that is your belief, then that can benefit your trades overall, whether you're bullish, bearish, or neutral. And that is the strategy block for today.
And that's going to do it for that segment as we keep on rolling into our final segment and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our next episode on Thursday. We also take a peek at what our question of the week is. And this just went live a few minutes ago, listeners. Kind of an interesting debate we've been having. We touched on this on the network last week. It's time to put it out to you folks, the ultimate arbiter of all things options. Remember, you're not the only ones looking at these polls out there. A lot of people in the industry look at these polls. So if you want to make your voices heard on certain products you want to see or certain changes you want to see, head on over to Ad Options, make your voice heard. It ripples and reverberates throughout the space in some interesting ways, including, let's see about this week's poll and what happens as a result, because everybody's asking us. Everybody was talking down at the OIC conference. All the rage is everything's 0 day right now. But everyone wants more than just SPX. They want the hot names that they trade all the time. You know, the Apples, the Teslas, all the names we always break down in our top 10 most actives. They want single name 0 days on those names. And so, obviously, it's a huge issue. There was a big point of debate down at the conference because the sticking point is the after-hours contrary exercise orders that we have on our options. You know, we talked about them before. Not a very highly utilized thing, but for a lot of professionals in the world of options, market makers and others, they still do kind of rely on that sometimes. It kind of depends who you talk to, what kind of trading style they have, whether or not they really utilize it. But it can come in handy sometimes. That short window after the close where you can decide, hey, I don't want these in-the-money options to be exercised. Those are contrary exercise orders, listeners. But reconciling that with 0 day, that seems to be the biggest stumbling block. You can kind of have one or you can have the other. It doesn't seem like we could have both with the infrastructure we have right now. So it's time for you folks to decide, listeners. If they both can't exist, one must go. Which would you rather have? The contra exercise orders, so being able to not exercise your options after hours, or your 0 day contracts in your Apples and your Teslas and all those fun names. That just went live a few minutes ago. Get over there to Ad Options, make your voice heard. This could have some interesting legs to it if we get some interesting discussion around this. Mr. Meatball, we'll start with you, sir. Where does your vote fall? B, where do you think our audience is voting? And then C, what are you keeping an eye on for the rest of the week, sir?
I mean, as an ex-market maker, there's no way I would trade these if I couldn't exercise after the bell. It would just, you couldn't. Because these stocks move between 3 and 315, 4 and 415. And it, the Qs, they'll make wild moves after the hours. You need to be able to have that. My solution would be, if you want 0 DTE Apple, make them cash settled at 3 o'clock or 4 o'clock Eastern and just run a cash settled version. As a market maker, I could manage that because, at 4 o'clock, I could just dump whatever stock I was using to hedge my positions at the level, and they'd be that are expiring that day, and they'd be gone. That makes a lot more sense to me than trying to get rid of the 0 DTE or the contra exercise, because frankly, you need that as a function of the equity stock market. It needs to be there.
Of course, that's not an ideal solution either, right? Launching another product to get it, because then you have people who are confused. Wait, I thought I did this one, but it was that one. How come I'm not getting the stock? There's going to be a hand holding. It's not ideal,
but that's it is a better solution than getting rid of the after hours exercise.
That is the other solution that has been floated out there. Yes, the cash settled. We did not include that in this poll, but intriguing stuff nonetheless. Which way do you think our audience is going, and what are you keeping an eye on for the rest of the week, sir?
audience, because they don't understand market making, probably saying get rid of the after hours. And the what I'm watching is this market, and I'm watching the key level. We are coming upon the end of the quarter, which means JP Morgan's quarterly hedge is going to come off. They are short at the 43.20 strike. That is going to be a magnet for the market, I think, for the week. So I'm watching that very closely to see how that performs, and that is going to be kind of the big thing I'm watching. Starting to get into a little earnings season. What happens to the VIX? And then the other piece is we're heading into a long weekend. I mean, it's essentially a 4-day weekend. What are they going to do to volatility? Are they going to just absolutely obliterate it? And how low can the VIX go, even if the market does continue this kind of slow slide lower?
You keep dangling this 12 handle, and VIX going to come back to us, huh? We'll see.
We've seen it. We have seen it.
My prognostication, I think, is somewhere in that level for Friday for vol of you. So we shall see. Mr. Uncle Mike, same question for you, sir. What is your vote on our poll? What do you think our audience is voting for? And what are you keeping an as on for the rest of the week?
Well, in terms of my vote on the poll, it's something to where I don't think I've ever as a professional money manager, I've never exercised an option after the close ever. And so it's never that for me, that's really a non-issue. I'm just going to get out of the option personally if I'm ever in that situation. So I would agree with Mark on everything from that standpoint, just because it's really not my world. In terms of what I'm watching for next week, wanting to see if we continue to go lower, which way we diddle, upward or downward, if you will, seeing that. And then I'm curious to see if we do get some type of crazy headline, if it does anything to the market, because I remember we talked about this all the time in 2020 and 2021. We would just say all these things like, well, if something like that happened, then that would be a market mover, or that would really crash the market. And it never did. And so I guess just this also goes to the thought of anarchy in Russia. The market doesn't really care that much, at least for now. But we'll see. Waiting to see what headline will actually move this market and get us a 100-point move in the S&P one way or the other.
What will derail the endless bull? We shall see. Let's also see what your folks are up to. Right now in the early voting, it is 100% in favor of getting your hands on some zero-day Apple and Tesla. And damn the consequences out there. No love. Not a single vote yet for the Contra exercise orders. But again, the voting is early, so we shall see how that evolves. As we go around the horn one final time, we'll start with the greasiest of meatballs. Mr. Meatball, sir, folks want to debate this with you or look at all your vol content in depth, where should they go? What should they do?
Yeah, go to optionpit.com. Today I was talking about UBXY and what it means and why it reverse splits and the ramifications. And we're talking vol and index trading every day. Go to optionpit.com, read my blog, The VIX Edge.
I haven't had a chance to check yet.
Not be disappointed.
Haven't had a chance to check yet. Are the strikes back for UBXY now? Can we actually trade it again?
Got the new ones. So they have to wait a day after they list. So when a stock reverse splits, you have the pre-split day, and that's with them getting out of it. That gives them a day to get out of all those options, blah, blah, blah. And then the following day, they list the new options. So, yes, they do have UBXY regular options today, and they're wonderful.
That is the worst. That's like dangling a nice new toy in front of a kid at Christmas.
I know.
Letting him open it and then saying you can't touch it. You can't play with it for a day. Go wait a day. That's exactly what that is. See, I hate everything about that process, but that's a conversation for another day. OptionPit.com, the place to go. And Mr. Uncle Mike, sir, where should folks go if they want to discuss with you the in-depth strategic detail of invading Russia with the Mercenary Army, sir?
Well, go to my YouTube channel, because I have one of my YouTube videos that I put out like a year and a half ago, and all of a sudden it got like 20x the viewers that all my other ones did. It's on selling covered calls, but using a call spread as an alternative. St. Charles Wealth Management, type that in YouTube and check out that video, because that's one that a lot of people seem to like, and I can't figure out why that one is so popular right now by comparison to the other ones. So check it out. It must be good.
Maybe we link to it. I'll have to go dig and see what. Maybe we sent some people your way, but someone's clearly.
It's a great strategy.
Yeah, someone's clearly sending some love to the Uncless and Mike. So check them out if you haven't, listeners. You could begin your journey. StCharlesWealth.com is the place to go. Give them a follow on Twitter as well, @Mike2. So that's going to do it for the old OB. Not going to do it for the network today. I'll be back in about an hour to hold court on all things crypto on the Crypto Rundown. Going to rejigger some of the live in between, so we'll be shutting down the live for a little bit, but back again for Crypto Rundown in about an hour, and then, of course, back throughout the rest of the week with all of our usual content, and then back again on Thursday, episode 2 of the old OB. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.